Ladies and gentlemen, distinguished guests from the industry and people in the audience, thank you so much for taking out time in the evening to join us on this interesting, already debated multiple times, but still there's a lot more to be done. So we thought we should take up this topic to discuss. Today we have gathered all professionals from the industry and academia to deep dive into this topic. We keep seeing a lot of financial influencers and experts trying to give expert advice on finance on YouTube, and people looking up to them for such advice and following them in real life. How much of it is really useful, and is it really worth following such influencers, or how is it that we should develop our knowledge of finance for personal finance, investments, and so on? That is something that I want to get into today. So welcome to the panelists, Mr. Amitabh, who is an ex-SBI person, and he's a director of Global BIFS Academy. Welcome. Renuka, who is an assistant professor at Dayanand Sagar Academy, Business Academy. And we have Hardik, Rakesh, and Amit from SBI Funds Limited. So welcome to all of you, and thank you so much, audience. So you can jot down questions, and towards the end of the session, you can also post your questions to the panelist, and they may take up the questions and answer them. So, so to begin with, let me start with Amitabh. So I
Yes.
would like to know your views on why is financial literacy crucial for individuals and society as a whole. Although I try to give a few points when I set the context, but more from you.
Uh, the challenge is that only, as per the data, only 24% of the population, Indian population, is financially literate. And everything revolves around finance, whether he is poor or a poor person or middle class or high net worth, because it is basically whatever resources we have to manage it optimally. So, and resources are always the basic point is in economics that for everything you have to, because resources are limited, human wants are unlimited, so we have to do the trading off. So this trading off has got different levels. For a poor person, it is basically for his survival, and he needs money for two things basically. One is for consumption purpose, and second one is for contingency purpose. But the people who have got surplus, who can manage to save something, then comes that he is going to invest or give that money where he gets the maximum return. That is the basic thing. But again, financial literacy has got different level and different meaning for different class of people. But I think we are talking of people who have got the basic understanding of finance. Am I right?
Sure.
Because otherwise the topic is very broad. We need at least 4 or 5 hours to deliberate on this
Right.
in a very simple manner. Otherwise, and this particular space is full of jargons, and which may sound some sense to people like us who understands this. But
Great.
again, to the spirit of it, it has to be made simple as far as possible.
Point taken. Very well put. You said about 24% are actually financially literate. Let me take this point forward to Hardik. Um, there are a lot of thumb rules being circulated on what proportion of your income or salary should be saved. Okay, and obviously there are different avenues for investing. So according to you, what is that thumb rule, and what should a common man really follow at the end of the day?
Yeah, thanks, Sid. So, while there are quite a few thumb rules that are there, I think one which comes to my mind is the your 100 minus your age is the number which comes to your mind. So, which say if you're 25 years old, So, which means 100 minus 25, 75% of your investments should go into equities. That simply flows from logic that the more time you have to retirement, the more allocation of your investments can be to a relatively riskier segment, or a relatively more volatile segment, which is expected to give you a returns which is higher than a fixed income return. And say as you grow older and you reach near to your retirement age, or if you say planned or invested for certain goals, to draw analogy to that, even in that case, as you near that goal or near that age, you switch over from the relatively volatile or high return to a relatively stable return uh, product, and a safe product. That is one thumb rule which I can think of. Another thumb rule which I read somewhere, which also makes sense, especially when when you planning for the year, say, so the thumb rule basically says, and normally common sense says that what you earn minus what you spend is you invest. But successful people say that what you earn minus what you invest is what you spend. So that is the thought flow change that needs to be brought in. But obviously, that has to come at a certain level when your income is at a certain level where your expenses can be taken care of, certain basic expenses, and we are talking about the larger or maybe discretionary expenses. That is when this reverse thought needs to be implemented.
Great. I think that's a good point you raised, just like a fund manager, typical of a fund manager, about investing in volatile instruments when you are relatively younger, when your risk appetite is much higher, and trying to make money from equities and then slowly, gradually moving on to debt instruments. Fantastic point. But considering the recent bull run that you've seen, there are a lot of advisors giving tips on where to put your money and get rich quick. So I'll take this point to Renuka. Since you're from academics, do we really care to teach kids and even, let's say, college students who are not from finance about basic investment strategies and personal finance?
Thank you, Sid. Yes, definitely. Me being associated with academics and working in higher education institution as a teacher, and understanding the importance of a role played by teacher and higher education institutions. But I mean, even the schools, for that matter, schools, colleges, and higher education institutions do play a significant role, and we understand that it is our prime responsibility to make our students, whether it is at school, at children, or at college, young adults, it is very important. And we consider this and take it very seriously that we have to impart and promote this financial education to our children and also the young adults. So I handle UG and PG students, and I feel, and even the higher education institutions, we feel that it is our responsibility to take it forward, and we play a very crucial role in providing awareness and promoting this knowledge of financial literacy to our students. As as when they complete their graduation and when they actually set in their steps into the real world, they should be equipped with all the required skill and knowledge which can make them independent and take their best decisions, informed decisions for their rest of life. And we take it very seriously and consider this as a very prime responsibility, and we plan so many activities, so many workshops and programs at different age groups of children or students. So depending on the age, the requirement of financial education, the levels of requirement will be different. So me being in the higher education, we understand that this knowledge of financial literacy and knowledge is very significant for, especially for UG and PG students, as they move ahead into their lives, making their careers and their future prospects. So as part of this being into a financial institution and playing a crucial role of being a teacher, we motivate the students, we encourage the students, we create awareness, and we provide all kind of support to make them understand. Some students they feel that they are complex topics and it is not my cup of tea, but we make sure that they have the required financial knowledge and education so that they can take their decisions independently when they move into the real world. So that is what we consider as a prime and important responsibility to ask towards our students.
Okay, so Renuka, just going back a little bit, just imagine uh, those days when you were in school and college. Do you think this was imparted that time, or is it something that has started off late recently?
Actually, when it comes to the role played by the colleges, I think it was not that significant. It was not considered as that significant, as in compared to the present the context. But I can relate myself to my family experiences, and there has been a lot of research done in the aspect of financial literacy, where it has been proved many number of times that family plays a very significant role, whether it is parents or grandparents or peer friends, everyone, right from the childhood, even when the child is like 5 years or 6 years, or as they grow, it is very important and significant to provide the people around them with this knowledge. So I can relate very well myself with how my parents have given this exposure and knowledge to me and created awareness. There was little awareness given by the colleges, and since I come from a finance background, maybe I did not have much problem in understanding this. But when I used to talk to my friends who are from not from finance, who are from other backgrounds, they used to say that finance is very difficult to understand, it is not my topic. But I feel in the present context, it is significant and important for each one of us, whatever profession we are in, whatever career we are in. It is very important for us to be financially, financial well-being, we call it as, which is very important, so that it has, we understand the importance of that. And being financially independent is more important and significant to everyone, and especially me being a woman and teaching women, girl students, I always encourage them to understand these topics and not to depend on anyone else. And they have to be, I always give them lessons of these finance and related areas so that they can take up these challenges and learn more, and they'll be more informed when they actually come out of their college. So I can say that colleges, institutions, schools, schools and the higher education institutions, colleges, they are playing a very significant role in promoting and creating awareness to our students in the present context.
Sure. So I think it's also about the pin code that you were born, the kind of family that you were brought up. So all that played a very significant role. So Rakesh, just taking this point forward to you. So Renuka said she was brought up in that environment, and obviously she also had perhaps that exposure when she went to college, and then she studied finance. So she had that exposure. So what about others? How can people, individuals, make informed decisions about investments if they have not been brought up in that environment or were never exposed to subjects of finance? They took up something else in college, and there are a lot of colleges which still have catching up to do. All are not so fortunate. All students are not fortunate to study in colleges like Dayanand Sagar, so they may not get that kind of exposure in their college. So what do you advise, Rakesh?
Yeah, thanks, Ed. So, see, today we have many resources and avenues available that if you want to learn about financial management, you can read books, you can on social media platforms, on Instagrams, on Facebooks, there are so many influencers. There are also many websites and institutes like Value Research, ET Money. So from here, an individual can learn about, how to manage their finances, how to make a portfolio, what is the risk involved in it. So compared to what we used to have 10 years ago, now there are many avenues. If someone wants, he can actually learn about it and they can make informed decisions.
Okay. So do you think people have the patience to read books nowadays? Because about 20 years back, the attention span was about 20 minutes. And now I was reading yesterday, the latest research says the attention span is about 45 seconds now. So within 45 seconds, we get bored. I'm sure the audience, many of them might be fiddling with their phones and trying to check the WhatsApp messages and all. So that would be happening. So what do you
I
think?
I completely agree with you. The younger age people, they are not having that much patience in, spending so much of time in reading books. In today's era, where you can, instantly make a reel of 30 seconds, and you can knowledgeable products. So I think it is about the age. If you are younger, you will spend more on time on social media platforms, while if you are adult or if you are a elder person, that you have the habit of reading books.
Great, great input. So I'm going to take that forward to Amit, since he made an interesting point. Rakesh made an interesting point about going through Reels and Instagram for financial advice. So that brings us to the rise of digital influencers and a lot of misguidance also happening. And SEBI is also trying to, I think, bring about some regulation on this aspect. So what do you think, Amit? How should a common man figure out who is the right person to go to for advice online? So all reels may not be really useful.
Yeah, so frankly, I don't have much view, but what I understand from looking at my group of people or who are not related to finance. So see, basically there is so any other field, if you think about like say fitness or say something related to Chandrayaan, right? A lot of awareness, but nobody knew what is a PSLV, right? But people started learning about it. So when so people who are not at all related to the field, when they come up with on these social media platforms, I think they at least learn about the jargons and the word over there. I think SEBI, which is going after, is I think people who are using it as a mode of rigging the stock price or curbing those people who are promoting their stocks. On second thing, how to do it? See, Siddha, what I feel is, as you go to a doctor, right? You pay a professional fee, or you go to an architect, you pay a professional fee. I feel finance is a complex field. You should allow a professional to manage your money. I know you feel that you can do it by yourself, but it's a tough job. And people are professionals like mutual fund or PMS advisors or financial advisors are there out, and there is I feel no there is so every income kind of guy, there is a financial intermediary which is available for you. Better you pay him and secure your future instead of trying by your own, because then there are so many distractions, right? And it creates and you have to do your job also. So if you are a teacher or if you are a nurse, you have to do your work also, and taking out time reading book will take instead give it to a professional who is expert in that and doing day in day out that thing. So and see, this financial world is not like a monopoly, right? Anyone charging is very high fee. If you look at the SEBI has been trying to curb the fees for at least for mutual fund side. So fees are reasonable. It's not like very high, which is being charged to the investor. So I feel give it to a professional, and you require social media for financial awareness and things to expand, because nobody knew about equity or maybe SIP 5 years back, 10 years back, but these influencers only helped to increase the awareness about SIP.
Right. So influencers are helping sell the products. That's what you mean, Amit?
Yeah,
It's good for
definitely, and it is a good product, right? I feel you never knew about marketing helps you to find the right product for you.
correct. But how do you figure out what is right for you? Because the influencer only knows what to sell and what's good for
Right.
him.
Yeah. That is a conflict of interest on the side of influencer. That I agree completely with you. But see, for a person who is a completely novice, to start with time, he or she learns about the right product, right? You never know what cream to use for your face, but you use many creams and then realize this is the right one for me. I feel in financial it is a little risky, definitely, because creams can generally you can throw it in 3 months or 6 months, but you keep on checking your portfolio, you keep on understanding the underlying investment or activities done by that scheme, which is being which is being promoted by the influencer. It helps you to understand or have some basic knowledge about what are you investing in. Otherwise, you will again fall into a trap or a wrong area, which we don't know whether it's wrong or not. But there is a lot of mis-selling which happens in all the financial world, be it life insurance, be it mutual fund, right? So mis-selling does happen. And even my parents got missold many times. So even I feel being they have a kid in their house, still they got missold. So yeah, it happens. But at least you are saving something, right? Instead of keeping it in a cash or FD, you are at least yeah. So there are many thoughts in my mind, but yeah, we will proceed with further questions. Yeah.
So good comparison with the face creams. Those also do damage in case they are not good enough. So
Yeah.
within 3 months, a lot of damage would have been done. So similarly, maybe in finance, you'll get conned a couple of times, lose some money here and there, burn your fingers, and then learn.
Yeah.
So Amitabh, since you have so much vast experience, so that brings me to the question on fraud, financial fraud. Financial fraud always existed, even before the digital era. So I would like you to highlight what are those precautions that people should take so that they avoid getting conned.
Simple steps, and that has to be explained to them in a very simple way. First of all, now the thing is that we should not try to do adventures there. Normally, the moment something which sounds very interesting, and overnight you become say kind of rich. So that the main thing is that once you are in digital space or in internet space, you have to be very careful, particularly regarding your password, your OTP. These things are of basic. By don't share it. Don't put your things, your login, your password, your and the last thing is that never share your OTP, your passwords with anyone. That's a basic thing. Since you are dealing in this area, so you are absolutely vulnerable. You are absolutely vulnerable. So you have to do the basic precaution, the way we keep our doors locked. And if I hand over the key to someone else after locking it, so then what is the point in locking that door? So it's as simple as that. Since we are doing all the and nowadays what happens, that most of the things we are operating through apps. Correct. People who are very smart nowadays and digitally highly educated, so they keep things in their mobile itself. Okay. There is another. I may sound a little crazy, but if a person who knows all these things, if he gets into a cyber crime, we know what are the facets. Many things are happening. But have you ever thought that there is a risk of carrying your own mobile? If somebody kidnaps you and you have got all your things are there, and at gunpoint, if they want to say completely plunder you, they can do it. Are you getting me? But
Yes.
that's an extreme situation. In our own interest, the basic things: login, password, and ultimately OTP. Okay, password and OTP. If you are very say you meticulously and religiously follow it, I think nobody can do any damage. That is my understanding.
I think beautifully put. This is a point that kept crossing my mind always. Everything is there in the mobile. What happens, if something happens to the mobile?
No. It is just a passing thought, and I was just thinking that if somebody say he has kidnapped and ultimately at gunpoint say, now you open your all account app, you put your say password, then transfer this account to my account, transfer this amount to my account. What will you do?
Now the apps even have auto submit of OTP, so no need to enter the OTP also.
And now this tap, I'm just taking one simple example. This tap. Now people go and do the tapping, correct? But again, they have to be very careful that they keep this amount as minimum as possible. So that if the moment you lose your credit card, I'm just giving one example. So person who has got it, they know that most of the people they will. But if you keep it at the minimal, many times they will swipe immediately. You will come to know because your that SMS will come. I'm just giving one example that there are, you see, we are basically what customer is needing. Customer is needing absolute convenience with lightning speed. So if you are going for that, everything that you have to do some kind of a trade-off or the other. So in this case, if you have all this convenience, so then you have to be careful. We have got electricity, but we have to handle it. We use fire, but we have to be careful. Similarly, when you are in a digital space, and we are more vulnerable here because everything is available, but only thing is that key is with us, and we have to be very careful with keys. And two level, three level securities in State Bank, particularly, if when I go, sometimes I get crazy that 3-level security is there. Okay, so we have to be very careful that this is in one click, your account may completely washed. So similarly, your portfolio, your everything is like that. You do a simple mistake, you're gone.
Right. So let me take this forward to Renuka now, more from an academic perspective. So Renuka, there is a thin line between, let's say, frauds and mis-selling. So I, as a consumer, should be aware how to differentiate. For example, let me give you a very personal example. This happened about 12 years ago when I went to open a PPF account to my bank branch. So this person started trying to sell me a ULIP product, saying that you invest in this, you will get more rate of interest. And he was trying to somehow discourage me from the PPF and get the form signed. His end objective seemed to be just get the form signed and grab my money and start investing. Okay. So I, as a consumer, I know that this is not a scam because I'm in the branch of a reputed bank. But at the same time, I, as a consumer, should be aware that something is being missold to me. So what do you think from an academic perspective should be done right from, let's say, school or college days to improve that life skill or build that life skill?
Yes, it's a very important question that you have put across, Mr. Sid. That is the reason I think we have to promote this knowledge of finance and financial literacy to the children right from a very young age. I mean, and continue providing the same till they grow up and they have that maturity and understanding of what is right and what is wrong. Now, as I told earlier, I have mentioned earlier that it is very important that each one of us, every one of us, play a very important role, whether be it parent or the grandparents or teachers. Every one of us play a very significant role in imbibing this knowledge to our wards. Now, here, in college, at college level, as I mentioned earlier, that we take it very significant, very seriously, and we meticulously and diligently plan and deliver courses or programs to our students in such a way that they understand this, they have a awareness, and they will be able to they will be put in a situation where they get the knowledge and understanding like what is right, what is wrong, and they have the ability to make decisions which are good for them. And we also teach them about the vulnerabilities which exist in the real world. And let me give you some examples what we do at higher education institutions to our students who are in the finishing schools. We generally integrate these financial education across all our subjects. and whether it could be financial management or budgeting, or we have tools for the personal financial planning, investment topics, wherein we bring in real life examples, and we as teachers, we relate these things to our students, and we also give them practical exercises and simulation games. And these practical exercises and simulation games, they put the students in, they wherein these games mimic the real real life financial situations. It creates that situation wherein the student gets a hands-on experience, and it makes their learning more easy and engaging. The knowledge which they get from these activities, it will definitely help them forward, to understand the criticality and the importance of these decisions and this knowledge. And we also make sure that we conduct various programs wherein we invite financial experts, guest speakers, who actually expose our students, give knowledge to our students in terms of the financial challenges and opportunities which are available to them in the real world. And apart from this, we also have finance club, wherein there are a lot of activities wherein we involve all our students and conduct various activities, workshops. This actually gives thorough knowledge, and it creates a great awareness, and it equips our students to have a wider or variety of understanding on the various aspects of finance. And it also, I feel, all these activities, all these workshops, or all these orientations what we give them in the form of guest lecture or in the form of this hands-on experience. And we also have business lab, wherein we take our students to the business lab, and we give a lot of hands-on experience. We take them to the websites of our regulatories, and we help them to create create an account, demat account, and then make them understand the importance and criticalities of all these financial aspects. And we also make them aware of these vulnerabilities and how careful they have to be, and how this knowledge, I'm sure with all these things what we do at college, I'm sure that our students, when they enter into the real world, they'll be definitely be more independent, more capable, and they'll be in a position to take well informed decisions. I think that is how we equip our students towards positive mindsets and positive knowledge of financial literacy.
I think those are very good points. Just like how colleges are encouraging startups to start off in the campus, helping them incubate, you are talking about having students to open their demat account, encourage them to invest, have simulation exercises done in college itself, school and college, and also invite industry experts. I think that's fantastic. All colleges should definitely follow that. Just taking the same example which I spoke about, the PPF thing, to Hardik now. So although a lot of things will be done in college in future, what is your view? What can the government do better, or what can the financial institution do better? In case of my example for the PPF thing, the sales guy would have been under tremendous pressure to sell products, which is quite understandable, fair enough. But what should the financial institution at a management level, at a corporate level, do to create awareness? So what are your views on that?
So for any mass level program to be successful, um, government intervention is a must. I would maybe take an example of say challenges that we faced during COVID, and where mobility was affected. So it due to combination of technology along with push from the government, the UPI became a mass accepted way of transacting. Maybe 10 years back, we would have not imagined that maybe a vendor, a fruit seller, or you would be maybe making payments of 5 rupees, 10 rupees uh, by way of UPI. So this is what can be done when say technology comes together with suitable enabling government policies. Along with that, say role of institutions. While institutions are profit making organizations, they also have a responsibility towards towards the society in terms of investor education. So, like for example, mutual funds advertisements you would have heard. There is always at the end of the ad, while the ad always shows the green aspects, they end with saying that mutual funds are subject to market risk. So that is the kind of responsibility that, and they've brought it down from fast reading to slow reading. Earlier it used to be fast reading. Similarly, mutual fund sahi hai campaigns, etc. Even for insurance, similar campaigns are being done. So these kind of awareness campaigns go a long way. RBI is doing campaigns in terms of how to deal with frauds, etc. So it is a responsibility uh, of regulators as well as corporates to ensure that the awareness about finance and knowledge about financial products reaches to the lowest of lowest cadres, and that is only when the democratization of financial services will be truly achieved.
Great. I think you brought a good point regarding UPI. I've been reading off late about how we can avail credit line now on UPI, and that's going to really change the entire game and perhaps even kill credit cards altogether. So that's something interesting and looking forward to. So, Amit, what's your opinion about financial literacy? How do we really assess financial literacy, and what's going to be the future with UPI and technology? How is it going to shape up the entire financial literacy game?
Sure. Hi. Thanks, Sid. So, Sid, uh, to the point of making people financially literate, right? To be honest with you, people have to put effort, right? You can't learn it. How do I say? Suppose you go and buy a fridge or you go and buy a car, right? You spend so much time in looking at the features. You spend so much time watching so many videos, and you try to understand the feature of the car and read the reviews and everything, right? Now, when you're spending that money, most of the people do some due diligence. They just don't go by whatever the salesman is saying, right? And I feel same should be done in financial world also. Even though you don't know those terms, but you should spend some time, Google it, learn from it, and there will be reviews all around the world, and then have some assessment that will it be good for me or will it be bad for me. And if a product which is completely uh, kind of mis-selling, there are so many online reviews which will help you, definitely will help you in terms of understanding that product. Now, there is no product which is perfect for everyone, right? Financial literacy or achieving financial goals is something a long-term process, and it is a never-ending process, right? Because you can never meet. But the most important thing is to save. Whatever you earn, you save some portion, because you can't keep working at the same efficiency and the same number of hours for your whole life. You have to someday reduce those number of hours and focus on your body, and someday retire also, right? So savings in utmost thing. Now, your own question of your financial literacy, I feel uh, schools and colleges are doing great job, but I think at that time people don't earn money. If you take my example, I never gave it importance, right? But when I started earning, then I realized that I need to save some money also. And you don't have you don't have any elder, or my father is a businessman, so he taught me, but some of the people don't have that privilege, right? And they end up using their first 2-3 years of money in upgrading themselves, buying an iPhone and all that. That is good thing, right? But after some upgrade, you will someday stop, right? Because how much you can upgrade in life, you can, beyond certain point, some people do stop, right? And then you end up having some money in your hand. Then I think that is the point you realize that let's start saving, right? Because I have to get married also, I have to buy some house also. But if you look to a person's life, right, there are 3 stages or 4 stages where he has to think of saving the money, right? One is getting married, buying his first house, and then the kids school or education, right? These are the 3 things he will always think in his back of his mind, that or he becomes mature. Because see, when you get a job at 22, you don't even think anything, right? Next 4 years are a runway for you. But then suddenly your friends start getting married, and then you get away and you try to make come up with the world in realistic world that people are doing very well. It's not just the job. You need to do much more. So at that time, you automatically get serious, right? And I feel it's a good thing they learn something in school so that they can refer back when they become mature to learn about these things. How UPI will change? See, UPI is a transforming technology which I think India or the organization Startup India launched in or started in India. Now other countries are seeking a system like UPI, which is seamless, frictionless, and with no money to being paid to Visa or Mastercard or some intermediary in between. Right? It has a lot of innovations yet to become, I feel. Credit on UPI is just a beginning, right? You can have uh, frankly, I haven't read much on it, but once it starts accumulating data about your transaction and spending pattern, it will start giving you. It will have your last history of 1 year, and it will tell you where did you spend the most, where did you, what was your travel spend, what was your. So if you use it exclusively for it, right? So it gives a sense to the user that where is his money actually going, right? Which is a phenomenal tool. You don't need anything to keep for yourself, right? Because UPI will have that data. So these are just beginning of UPI, which is in the infancy, and once the ecosystem keeps on building, I feel they will keep on adding the features on UPI. Now just imagine how easy it has become to buy insurance, right? And how easy it has become for someone to start investing using these UPI apps, which makes it so frictionless for you to have an SIP, pay your insurance premium, pay your life insurance premium, right? Which is phenomenal, right? So it is evolving, and once I think it is in a very good people's hand, the system of with the RBI, and thanks to the country or the constitution, or we got a very good institution in the form of RBI, protecting us from large jumbo schemes which can defraud large number of people in India.
Great. So Amit, you really won my heart by talking about those 3 points: marriage, house, and kids' school. So buy a house on EMI and put your kids in some international school. Automatically you start saving, get serious about life, stop upgrading yourself. So that I think is the best financial education. Thank you so much. I want to know from you about the possibility of a public-private partnership to have more awareness and create a more financially literate population. Any inputs on that? What can the government do more? What can the private sector do? How can we work together? Maybe you can even involve the colleges. What should the schools be doing according to you, so that kids right from school, they start knowing how to spend their pocket money or invest their pocket money. So any thoughts about this? How can the public and private sector work together to ensure and create a more financially literate population? Any
It
thoughts,
is.
tips?
It is happening automatically. It is happening because you see, many of the part of our country is still unbanked. Correct. In that particular area, all these non-banking financial companies are there. Correct. And these non-banking finance companies are basically taking care of the real downtrodden who are really in need of their assistance. Okay. So all the non-banking financial companies, most of them, 90% of them are from private sector. So who is taking care of them and who is making them aware? It is already happening. The only thing is that it has not been understood, or it has not been explained that way. If you look at the entire BFSI space, 1992 onwards, when the private sector was allowed to open bank, then subsequently insurance companies, and now the kind of penetration this NBFCs have, so they are actually making them aware. And here I must tell, the way they are using the technology, the way they are processing the credit needs, Their only challenge is that they cannot control the cost, because they have to take it on loan and then they subsequently give it. So that is the only area. But as far as your this micro ATMs and all, how to use, even in big villages or small villages, shopkeepers has become banking correspondents. So this is how financial literacy may not be by design, but by default it is being brought by the private sector itself. Our regulators are regulating in a very smart manner, but again, if it is going to reach every nook and every corner of this country, the private sector and particularly NBFCs, they are playing a fantastic role. And if you, I think now if you decipher in that manner, because when we started after nationalization on why to say nationalization, State Bank was born 1st of I think July 1955, right? So what was the name of the committee? All India Credit Rural Survey Committee. We wanted to penetrate there. Then subsequently 69, government thought that we will go after nationalization. We did our part. Government did their part, but subsequently when they realized that it is not only government's cup of tea, then only private sectors were brought in. Am I right? And nowadays, all the unbanked and all the loan-starved areas of the downtrodden, a percentage, a bulk of that is being taken up by this non-NBFCs, and NBFCs are private players. So already it is happening. The only thing is we are not that clearly trying to understand it. It may not happening by design. It is in most of there's such a vast country like India, most of the things happens by default.
Would anyone
Also,
like
just
to add
would
on
like
something?
to add that financial literacy is also a kind of a iterative process where the regulator also is on a learning curve. And you see, when new products are introduced, mostly in the newer phase, there is always a level of I would say boundary testing, which is done by the players. Up to what end can they be pushing the customers to achieve their goal of earning profits. And then the regulator would step in and put in guardrails to say okay, this is allowed, this is fair game, and this is not allowed. Here, for example, when initially ULIPs were launched in India, uh, uh, they were marketed as an alternative to mutual funds and sold to any and all people, whether it was suited to them or not. I had seen examples of people closing near retirement being sold ULIP products where the product would not make money for 5 years, and there would be another 10 year of cooling period, and then the cash flow would start coming. That kind of product was being sold to people who are near retirement. Then SEBI came in, streamlined the process of selling ULIPs and what kind of expenses can be charged, not charged, etc. Uh, IIDA came in. Sorry, my mistake. IIDA came in. Then IIDA brought down the caps on the charges that can be levied, the kind of commissions that can be paid. Earlier, exorbitant commissions were being paid. Similarly, in mutual funds, like Amit had earlier mentioned, SEBI keeps a track of the expense ratios. They, so as newer and newer products come in, either by way of default or by way of competition. Now, Zerodha has come in broking. They are promoting zero cost or negligible cost broking. So automatically, they are pushing the established players to innovate and to come out with more competitive products which suit the masses. So it's the financial literacy. It's a self-run cycle, as well as a cycle which is kind of driven by, say, regulators, companies, etc. And finally, uh, the one part of the financial literacy which is your own learning, that nobody else can do but yourself. You have to have a bit of common sense, which works in most cases. and that is your best friend in most of the times.
Great. Common sense is unfortunately not very common. That's the only problem. But yes, I think the point about regulator also being on a learning curve and learning, that's I think really true. So as and how things move, they also learn and introduce new regulations and policies. Thank you so much.
Sid, I would like to add a point
Sure,
here.
sure.
Uh, Actually, I would like to mention the significant step taken by our esteemed RBI, that is establishing this National Center for Financial Education, which is promoted by our RBI and other regulatory authorities. And the mission of this is to achieve financial literacy and empowered India, financially literate and empowered India. And in this, we have various resources available online and which are very easy to access by everyone. And even, I mean, they have modules, they have courses to provide this financial education and knowledge or the literacy to even smaller students, which starts from right from 6th standard to 10th standard. And they also have a wonderful initiative of the concept which is based on train the trainers. That is, they also provide training to the teachers who in turn train their students. So which is a wonderful initiative, and they have various programs which are suitable according to the age of the individuals. And this is a very good initiative, I can say. And they also conduct this national financially literacy assessment test, in which can be taken up by anyone and everyone. And one more thing which I've come across is the uh, activity or the initiative of NISM, National Institute for Securities Management. We were talking about the private and public collaboration. Now, in this regard, this is a wonderful step, I can say. NISM is collaborating with private institutions, especially with the higher education institutions, where they are coming to the colleges and they are offering this knowledge on the financial aspects, financial investments, and financial literacy,
Right.
which is a wonderful initiative, I can say. And all the colleges can utilize this opportunity, and this collaboration will definitely help the students to get more exposure and learning on these aspects. So this I wanted to add, which is a very significant steps towards
I
achieving
also
and promoting financial literacy.
I
Sure.
also want to add here, because
Sure.
the RBI has taken a great initiative. They have formulated something called National Strategy for Financial Education by RBI, and this has started 2020. It will 5 years. For 5 years they have given the time, and this particular strategy is being sponsored by all the regulators. This is
Excellent.
one, and it was once tried before 2013 to 2018, and again after it is coming in a new avatar. So government is very much aware, and I think, because if you permit me just 2 minutes, because all depends on how clearly, if we want to be very smart about our own investment, savings, whatever, financial education or literacy, we have to have certain clarity our own life cycle. Because by the average age of 25, somebody joins a job or starts a business. After 3 years, 3 or 4 years, he is going to get married. Okay. So the moment after 3 years, then it will attract some money. Okay, to spend. Then after 2 and 3 years, he or she will have the first kid. Okay, then that kid, after 2 3 years 3 years in new NEP system, new education policy, that kid will go to the school for foundational course. Then again he'll grow up. So every event in life has got some expense. Okay, and in the meantime, by the time that particular kid becomes 18 years of old, then his technical education. So this clarity, this life cycle from 25 to 60, that is our best golden years, because at that time we earn, and that time we can save, And with that earning also, with that earning only, we have to take care of all these social events. And by the 60-65, again, we will retire, and again, our income curve will come down. So this, every person in the school, and not school, but by 12th, by +2, if somebody explains this in simple language, so then they will be very informed that this has been explained. And I will take a cue from madam's initial remark, because school, we talk, the moment we talk about school, we go in a formal frame that it is a brick and mortar. हिंदी में कहावत है, परिवार ही सामाजिक जीवन का सर्वोत्तम पाठशाला है. Whatever we learn, the basic foundation comes from the family only. That was my point.
Thank you. So thank you. We are mindful of time, so I'll throw open the forum to the audience. If there are any questions, please raise your hand, and please come online and start asking those questions. Anyone? No one has questions? All right. I think there are no questions. I see one question from Shailesh in the chat box. Let me just read out. How consumers are being educated on how to choose the financial products that best suit their needs and risk tolerance? Who would like to take this up? Amit, Hardik, anyone?
Again, if you permit, that comes from the person's little bit of understanding about his own life cycle, because how he understands his own life, then only he can understand. Anybody whosoever is giving a piece of advice, you see, giving advice is something else, but again, accepting that, because these are the things, the real devil always lives in execution.
Thank you.
Give me a number of advices, but whether I am in a proper frame of mind to accept it and realize and make a reality check with my own life stage, that is more important.
Anyone wants to add? Hardik?
Just wanted to add one thing. Anybody who wants to save or invest, first of all, two things. One needs to differentiate between saving and investment. We use it as similars, but they are actually quite different. And secondly, one needs to understand the importance of setting goals. Like goals are important for whatever we want to achieve in life, in professionally, personally, etc. Goals are also important for achieving your financial targets. So, and also the timing of the goals. So the consumer, as a saver or an investor, one needs to decide whether I want to save or invest for a period of 2 years, 3 years, 5 years, 10 years, 15 years. And according to that, my investment strategy and my risk appetite would vary. And that, coupled with the stage of life I am at, whether I am somebody who is starting off, whether I am who is about to get married, whether I am stable with young kids, or whether I have kids who are now graduating, or maybe at a later stage their marriage. So depending on what are your goals and how long are your goals, your investment thesis would vary.
Sure.
One point I would like to add here, sir. Yeah, very well. I second Mr. Amit sir and then Hardik sir. Really, great inputs, and that is how we have to think and look in those aspects. What are our objectives, short term, long term, and what are our commitments, and what is good for us, and which investment suits us. Here, one point I would like to add: some people, they really feel that finance is a complex, area to understand, and they really don't understand, maybe because they come from a different background, or they come from a different course. Now, in that case, I would suggest that not to fall prey to these vulnerabilities or the Ponzi schemes, quick returns in jiffy. So to be careful, to be conscious, when we do not have much understanding on particular scheme or investment, I think better we can hire a financial advisor or approach a financial advisor who can give us appropriate and right information and knowledge, which can help us to go and go in the right direction, who can guide us in the proper direction. That is what I wanted to add. So
Sure.
I think,
So I think
yeah.
when need becomes
The
greed, that is what happens.
Financial Planning Standard Board of India is the answer, and every bank and every financial institution should have a properly trained wealth manager for this. Then only it will be solved.
I have one more question from Sumit Avasti. Is private company safe for long-term financial investment considering the associated risk in past years in few of the known corporate banks? Who would like to take this up?
So this is a very broad question. While see, there is one basic fundamental of any investment: higher the expected returns, higher the corresponding risk. So
Yes.
the bank which is being mentioned over here, I'm sure everybody knows. So it is very simple. The lower down the rating curve you go in a bank or say any instrument for that matter, or higher the risk curve you go, you are bound to take that amount of risk if you want to make the return. So to put it simple, say if you are investing in a AAA bank, I am excluding PSU banks right now. I'm assuming uh, all PSU banks are relatively similar risk. So when we're talking about a private sector, so if you are say investing in somebody like HDFC or ICICI for that matter, so here these are the safest of safe kind of banks because they are been operating multi-year profitably across various segments, and there that is a relatively safe kind of this, and that also shows from the rate of interest offered on their fixed deposits. They would be relatively lower. But say as you go down, say go to a small finance bank, or say for example, or maybe cooperative banks, that is when your risks go on increasing. So while they will be offering you attractive returns, they you have to understand that returns that they are giving you is their cost, and they have to deploy somewhere more profitably, which is at a much higher level. So which in turn means that they would be taking higher risk as compared to a larger bank. So it's simply a function of risk and reward, whether you want that higher few basis points of interest versus lower. If you have that appetite of of taking that risk, put some money into in a lower rated bank versus a safer bank. I would only advise that don't put all the eggs in one basket.
Valid input, valid advice. Thank you so much. So let me quickly summarize the discussion for today. First of all, thank you so much. The discussion was really interesting. I enjoyed chatting with all of you today. So quick summary of what we discussed. I have jotted down a few points. So Hardik gave us a thumb rule for saving 100 minus the age. He said invest in volatile instruments when you're younger, equity debt, and then gradually start moving into safer instruments as you inch towards retirement. Uh, Renuka spoke about how the colleges are now making students more aware and also doing experiential learning by having them invest in products and so on, so that they learn from a young age to actually start investing. Since we were not so privileged to do all that, so at least the current generation of students are perhaps getting that. We also discussed about uh, consumers should actually do some due diligence before going and investing their money, and they should not put all their money in one basket. Should spread out, diversify their risks. So that is one more point. And as Amitabh said, when you are playing with fire and electricity, you need to play safe so that there is no other second thoughts to it. So UPI seems to be a technology which is going to kill credit cards and also creating a revolution in India. So we are yet to see what more can UPI bring us. whatever said and done, saving money is essential. So at the end of the day, whatever technology might be there, whatever influencer might say, we should still save money from whatever we are earning. And don't just go by financial influencers advice. Go to a qualified financial advisor before investing your hard-earned money. So with that, I would like to close today's session. Thank you everyone for joining us. Thank you to the panelists, Amitabh,
Thank you,
Renuka,
sir.
Amit, Rakesh, and Hardik. Thank you so much.
Thank
Have
you.
a
Thank you,
wonderful
Mr.
evening.
Siddharth. Thanks
Thank
a
you.
lot.
Thank you.
And it is my
And
delight to be a part of
we
this.
will also
panel
remain connected
discussion.
with each other in future.
Yes, yes. It is my
All
privilege
the
to
best.
be part of this panel
All
discussion,
the
and
best. All the
I'm
best.
extremely glad to share this platform with my co-panelist. And I had a great insights of all the aspects what we have discussed and great takeaways. Thank you so much.
We are
Thank you.
lifelong. We are lifelong learners. That's why we are
Exactly.
here.
Absolutely.
Sure.
Thank you.